Michael here, head trader at True Trading Group. July 11th, small green day for me. I made a really nice trade in IMUX, but then I gave some of the profits back later in the day. Still finishing the day green, but gave a chunk of the profits back. This video is about waiting for yours. And it's about resisting the temptation, resisting FOMO, which is fear of missing out. Because there was a couple of stocks today that made big moves, huge moves, and they did them out of nowhere. I mean, these stocks were trading peanuts, had hardly any volume whatsoever. Then all of a sudden, volume came in out of nowhere. The stocks just took off like a bat out of hell. No pullback. I mean, and when they pushed, and they pushed far. IMUX and RVLT, those two specifically come to mind. Like this here, let me pan this in. This IMUX trade. I mean, guys, here let's take a look at here. This candle right here traded 1,100 shares. 1,100 shares in a 3-minute candle. That is basically not trading. Okay, I mean, this candle, 1,300 shares in a 3-minute chart. This is a great chart setup, by the way. This is a nice double bottom gap up. The trade line came into play. This is a really nice chart pattern, but the price action wise, but the volume was non-existent. There's just no way that I could have taken a position prior to this move, because there was just literally no volume prior to that for me to take a position size. I mean, that 1,100 shares, that's like my tier 1 position. And that's an entire 3-minute candle. There's just no way that I can take a position in this before it makes that move. But then once it made its move, I had to sit there and wait and watch the stock make this push, because it's not a setup that I was comfortable with. RVLT, same thing. RVLT, very, very, very low volume, almost identical chart setups. Double bottom gap up, trade line comes into play, pushes the thing higher. But in here, you're talking about 100,000 share candles, but this is only a 30-cent stock. So you're talking this thing is trading, just over $30,000 in a 3-minute candle. I mean, again, very, very low volume. Okay, so again, not something that I can take a position in or feel comfortable taking a position in here. And then the stock, does this, and I have to sit here and watch this thing push, because once the stock starts to get moving, I'm not just going to start chasing the stock higher. Okay, I'm not just going to start buying the stock here. Okay, because where's my risk? You always need to be more concerned with, guys, when you're placing your trade, you always have to be more concerned with what's going to happen if you're wrong. How much money are you going to lose if you're wrong? That's way more important than how much money you're going to make if you're right. Okay, so you've always got to be concerned with what's going to happen if you're wrong. And what dictates a trade for me, you guys, I feel like, too many traders have the misconception of if you make money, it's a good trade, and if you lose money, it's a bad trade. And you've got to get rid of that, because it's a lot more, placing a good trade is a lot more than just, oh, the stock went up. Or a good trade is a lot more than just the stock went up. I don't chase momentum. I'm not a momentum chasing trader. I trade patterns. I trade setups. Now, there's plenty of traders out there that do trade momentum, and they do chase the stocks that are getting moving, and they have a feel for the momentum, and they're scalpers that like to get in and get out within a couple of seconds and ride that little momentum push. That's just not my style. It's not my strategy. And that's why this video is about wait for yours. Okay, don't get sucked into a trade setup that is not yours, that you're not comfortable with. Do not force yourself into a different strategy that is not your niche, that is not what you're comfortable with. You have to have the self-identity of who you are as a trader, what kind of style you like, what setups and patterns fit your style, and you have to stick to those. And if a stock, just because the stock is making a move and the stock is moving higher, doesn't necessarily mean it's a good trade for you. So I had to sit here and watch RVLT make that move. I had to sit here and watch IMUX make that move, because these stocks, they were actually on the watch list in the morning, but there was just such low volume off the open that it would have been very difficult for me to have positioned myself in this stock in here. just because the volume was so light. I just wasn't comfortable with it. Okay, it wasn't comfortable. I mean, 1,100 shares on a 3-minute candle, that's like my tier 1. You know, I mean, I can't go ahead about that and really get a position size. Now I can't buy, you know, a few thousand shares if the stock's only trading 1,100, 2,000 shares in a 3-minute candle. So that's why I didn't have a position in these stocks until after the volume came in, and I was comfortable with it. But you guys will never see me chase momentum. You guys never see me, you know, buy a stock here or here. Okay, you guys will never see me do that. I don't chase the momentum. It's like I like to position myself in patterns and then sell into these moves. I like to sell here, sell here, sell here. Like that, I like to get long. If the stock had volume, I like to get long in here, sell, sell, sell. You know, I don't chase stocks higher and get long up into the push and then scalp myself out, you know, here once trading resumes. This is not my style. It's not my strategy. So I waited for IMUX to put in a pattern, okay, and I caught a really nice trade on it. But the point is not so much, the point of this video is not so much the actual trade that I made, more so that it is that I waited to make my trade. I waited for the stock to give me a setup and a pattern that fits my strategy, that's within my risk parameters, that I'm comfortable making. Again, just because the stock's moving higher doesn't necessarily mean that it's a good trade for you at that time. Because let's say I entered IMUX right there. Let's say I did that. I bought it right there at $15. Okay, then the stock halts, reopens for trade, and you sold it right there for $17. That's a nice trade, $2 a share. You would have made money. Me personally, for my style, I'm not saying it's a bad trade because there's traders out there that buy into that momentum, ahead, you know, looking for the haul and selling it once trading resumes. That's some trader's style, not mine. I'm not a scalper. Okay, so what I'm more concerned with is with an entry point here. Where's your stop loss? Okay, where's your stop loss on this entry point? Are you going to risk this all the way back to the initial morning high? You going to risk it back to here? Because that's a lot of risk. I wasn't comfortable with that. Okay, I wasn't comfortable with that. So I couldn't clearly identify my stop loss at this entry point. So that's why I waited. And this, even though the stock's going straight up, is not a good trade for me. The risk reward is not a good trade. And like I said, making a good trade is more than just making money. It's more than just, oh, the stock's going up. It's identifying a high probability pattern that more often than not is going to work out one way versus another. It's identifying good risk reward setups and scenarios. It's putting yourself in that position where you can clearly identify your risk. You've got your profit targets. You have your game plan. All of those things go into making a good trade. It's possible to make a good trade and still actually lose money because there's no pattern out there that's going to work 100% of the time. So you can put yourself and identify a really good pattern, a really good probability setup. It's an A+ setup, good risk reward. You get into the trade. It doesn't work out. You stick to your stop loss. You cut your losses and you move on. That's still a good trade even though you didn't make money. Okay, that's still a good trade even though you didn't make money. You're not going to make money on every single trade. So you have to start to disconnect those two things. And it's not just because you make money, it's a good trade. And it's not just because you lost money, it's a bad trade. Because it's not necessarily true. Okay, and just because the stock's moving higher doesn't mean it's a good trade at that moment. For me, okay, because for me, this is not a good trade at that moment. So I waited for mine. I waited for something that I like, that I'm comfortable in. Everyone's talking about IMUX. Everyone's talking about RVLT, social media, this and everything. Okay, great, but it's not a setup that I like. So I waited for IMUX. We halted. We reopened. I actually tried to get long here because at this moment we had a Fibonacci level that was lining up here. We had the trade line VWAP. I actually was trying to get long down at 1550. This actually tailed right to 1550. I was too slow. It sat there. It came down to 1550 for a split second. And before you can blink, it was back above 16. The spread on it at the time was like 30, 40 cents anyway. So I never got in. I was just too slow. I wasn't, ready for that right off the trading halt, and it happened so damn quick, that once it touched 1550, if I didn't hit the button at that very split second, it was already back above 16. And we went all the way up to that to put in a new high of 1773 right here. So I waited until we got then this pullback, and now what I'm looking at here, okay, is the trade line VWAP area is acting as support. It acted as support right here for me on this candle, and as I start to look back, you can see this entire move was based on the trade line support. Okay, you guys see this trade line support this entire time. So I went ahead and I got long a tier 1 position right there at 1610. Okay, I'll take you guys to my trade announcements on the day. Here you guys can see long tier 1 at 1610. Stop loss is at 1520, and I'm going to add tier 2 through the 1750 area. Okay, back to the chart. So there's the entry point. Stop loss is going to be just below VWAP in the trade line. So my stop loss is right there. Okay, there's your 1520. So there's my entry. There's my stop loss on the tier 1, and I'm going to add tier 2 on a break up through 1750. Okay, so I'm entering tier 1 here because I think there's support at the trade line, but it hasn't really proved it to me yet. So I'm entering a tier 1 with a tight stop on my risk. We make a nice little bounce. We go back up to the high of the day. So I'm like, okay, there's support. We pulled in, we put in this tail, and we start to push again. I go, okay, there's my confirmation. And I add it to my tier 2, to a tier 2 position, full size position right here around 1738. And I caught this nice move right through the high of the day. And as soon as we push up here through the highs, I start taking my position off the table. Okay, back to my trade announcements. You guys can see took some profit at 18. I sold 25% of the position at 18. I sold 50% of the position at 18.49. And I held on to one last piece, looking for the trade line to continue to hold support right here. It also lined up with the previous high of the day. And I was looking for some continuation, and we didn't get it. We rolled it back over, so I sold out of the rest of my position right here once we broke down below the trade line and below VWAP. You guys can see here I sold out at 1686, the remaining piece. So I lost a little bit of money on this remaining piece, okay, but pulled out real nice chunks on 18 and 1849 on the bulk of the position, so walked away with a really nice gain and a really nice trade. Now, is it the same percentage gain as if I had gotten long, here and sold out of it up here? No, it's not. But the trade that I also made, that I pulled the trigger on, also carried much lower risk than that. And it's something that was a trade setup and a pattern that I'm comfortable with and fits within my style and within my strategy. And that's what's important. It does not matter if a stock goes up 10,000% in a day. You have to be comfortable in the stock. Otherwise, if you're not comfortable, your emotions are going to take over. You're going to make a mistake anyway because your emotions are all out of whack and you're not trading with a clear mindset. So it doesn't even necessarily matter what the stock is doing because the slightest little pullback will stop you out or whatever if you're not comfortable. So you have to wait for what's yours. And that's what this video is all about. And it's tough. It's not easy to do. It's easier said than done because you see a stock moving, you get excited, you're like, oh man, look how much money I could have made. You think it's going to keep going. Now it's going high. You're like, oh, should I buy it? You don't. Then it goes higher and you're like, oh, damn, I should have bought it. Should I buy it now? And that's when that FOMO starts to take over, and you have to resist that feeling. Okay, you have to resist that feeling and wait for what's yours. Be selective, know what you like, and look for those patterns and stick to it. Okay, don't get sucked into a strategy or a setup that you're not comfortable in. And that was what this trade, this lesson was all about, because like I said, RVLT guys, I meant to miss this entire move. I wasn't comfortable buying this stock in here. I just wasn't. Okay, I couldn't clearly identify my stop loss. I thought the risk was too high. I wasn't comfortable, so I didn't place the trade. Okay, instead I waited for that IMUX to give me a setup that I was comfortable in. I was able to scale into that position with low risk, get up to my full size, scale out, and make a nice chunk of change. Okay, and that's what I want you to take away from this video. All right, stick to what's yours, guys. I'll see you guys in chat tomorrow. We'll look to finish the week off strong.